And remember, this third window is going to always be helpful for you. I will always be emphasizing that as long as it can help you guys to mitigate the very common risk when trading, which is one of the main killers for retail traders and for those using EAs, which is identify when we are in a range. So how do we identify that we are in a range? Well, from this moment in time right there, once we had this second rejection of this low and we had this bullish candle, to me, that is the moment that we have a range in this market, because in two different time sequences, we had a test of support in the context, and now allow me to expand this third window, in the context of falling volatility. So if we have falling volatility, okay, remember this red line on my third window at the bottom is just going to depict the separation from the upper to the lower Bollinger Band. That's it. That's all it does, man. It's just telling me what's the distance between the upper and the lower Bollinger Band. And it then gets portrayed, gets depicted through this red line, okay? So if we have a falling volatility through the Bollinger Band width, which is what's called this red line, and on top of that, we have a double rejection of a significant support, that's it. We are in a range. So whenever we are in a range, you are going to have a hard time finding potential trades unless it's going to be at the extreme of the range, either at support level or at the top side at the resistance level. If you're a range trader, these are the markets that you want to be trading. Okay. If you are like me, a more kind of like trend following trader, this is a market that you want to stay away from. Okay. So that's just my